What if I told you that a move of just a few hundred dinars in Iraq's dollar market could be signaling something much bigger beneath the surface? Welcome back to Iraqi Dinar, where we don't just read the numbers, we decode what they really mean. On Monday, the US dollar closed higher across Iraq, hovering around 152 dinars per $100. At first glance, that might seem like a routine fluctuation. But in a market as tightly watched and as politically sensitive as Iraq's currency system, even small shifts deserve attention. Let's break down what actually happened. According to a survey from local currency traders, the dollar traded in Baghdad's main exchanges, Al-Kifa and Al-Harithia, at 151,500 dinars per $100 by the end of the day. Earlier in the morning session, it had been sitting at 151,200 dinars. That's a noticeable intraday climb of 300 dinars per $100. Now pause for a second. A 300 dinar move might not sound dramatic to someone outside the region. But in Iraq's tightly managed exchange environment, where the central bank works aggressively to maintain stability, these incremental increases can reflect underlying supply pressures, demand spikes, or even psychological sentiment shifts among traders. In the retail exchange shops across Baghdad, the dollar was being sold to customers at 152,000 dinars per $100, while shops were buying it back at 151,000 dinars. That spread tells its own story. Exchange shops are pricing in caution. When the sell price widens upward, it usually means there is stronger demand from buyers who want to hold dollars, or there is uncertainty about where the rate might move next. Meanwhile, in Erbil, the numbers painted a slightly different picture. The selling price stood at 151,550 dinars, and the buying price at 151,450 dinars. That narrower spread suggests a more balanced market environment compared to Baghdad. Regional variations often reflect differences in local demand, cross-border trade flows, and even political coordination between federal and regional authorities. So what's driving this? There are multiple layers to consider. First, Iraq operates under a heavily managed currency system. The central bank uses a combination of official dollar auctions, electronic transfer controls, and regulatory oversight to manage liquidity. When the market rate starts drifting upward, it often indicates pressure in the parallel market, where demand for physical dollars exceeds what is immediately available through official channels. Second, there is the psychological component. Currency markets are driven as much by perception as by hard data. If traders believe that tighter dollar supply could continue, or that import demand is rising, they may rush to secure dollars early. That behavior alone can push rates higher in the short term. Third, regional and global factors always play a role. Iraq's economy is deeply connected to oil revenues. When global oil markets fluctuate, or when there is uncertainty in international financial systems, it can influence how much dollar liquidity enters or exits the Iraqi market. Even geopolitical tensions in the broader Middle East can shift demand for safe haven currencies like the US dollar. But here's the bigger question for our Iraqi dinar community. Is this just routine volatility or part of a broader trend? Over recent months, Iraq has been implementing banking reforms, tightening compliance measures, and digitizing parts of its financial infrastructure. These reforms aim to reduce dependency on the parallel market and bring more transactions into transparent, traceable systems. When such reforms are introduced, short-term friction often follows. Some traders who previously relied on informal channels may find access more restricted, temporarily increasing demand in the open market. That friction can show up exactly like this: small but steady increases in the street rate. It's also important to understand the difference between the official rate and the market rate. The official rate is set by the central bank and used for government transactions and official imports. The market rate reflects real-time supply and demand dynamics. When the gap between these two rates widens, authorities usually respond with measures to restore balance. Right now, the market hovering around 152,000 dinars per $100 suggests mild upward pressure, but not a crisis situation. We are not seeing panic levels. We are seeing controlled tension. And controlled tension often signals adjustment rather than collapse. For everyday Iraqis, these shifts matter. Importers feel it when they purchase goods priced in dollars. Consumers feel it when imported products rise in price. Investors monitor it closely because exchange stability is a key factor in long-term economic confidence. For those following the Iraqi dinar from abroad, it's crucial to avoid emotional reactions. A single day's movement does not define a currency's trajectory. What matters more is the pattern. Are these increases becoming more frequent? Is the central bank intervening more aggressively? Are reforms tightening supply intentionally? These are the questions that truly shape the narrative. Another important detail is the buying and selling spread in exchange shops. In Baghdad, the 1,000 dinar spread between buy and sell indicates caution and opportunity simultaneously. Exchange shops protect themselves by building in a buffer. If volatility increases, that spread can widen further. If stability returns, the spread typically narrows. In Erbil, the much tighter 100 dinar spread suggests confidence that prices are not expected to swing wildly in the immediate term. That regional contrast is subtle, but it provides insight into sentiment differences across the country. Zooming out, Iraq's financial system remains in transition. The government continues pushing modernization initiatives. Banking sector reforms aim to reduce cash dependency. Digital payment systems are expanding. International compliance standards are being strengthened. During times of structural reform, currency markets often move in ways that appear unpredictable. But beneath the surface, they reflect adjustment to new rules. So here's the takeaway. The dollar closing around 152,000 dinars per $100 is not just a headline. It's a snapshot of a market balancing reform demand, liquidity, and sentiment all at once. It tells us that pressure exists, but it also shows that the system remains functioning and responsive. On Iraqi dinar, we focus on context over hype. Today's numbers show upward movement, yes, but they also show stability within a controlled range. No sudden spikes, no runaway inflation signals, just a measured shift that deserves monitoring. As always, the real story unfolds over time. Watch the spreads. Watch the gap between official and market rates. Watch how authorities respond. Because in currency markets, that consistency tells a bigger story than any single trading session. Stay sharp, stay informed, and keep your eyes on the data. This is Iraqi dinar, where every number has a meaning, and every move has a message.